네, 버나드 케인과 함께하는 미국 주식 시간입니다. 자, 지금 미국 현지에서 일어나는 일들을 생생하게 전해 듣는 시간인데요. 바로 만나서 이야기 들어보도록 하겠습니다. 자, 현재 코로나 그리고 인플레이션, 러시아, 우크라이나 사태까지 정말 증시를 압박하는 악재 이슈들이 너무나 많이 존재하고 있습니다. 국내 증시도 너나 할 것 없이 하락장을 보이고 있는데 미국 현지 상황은 어떤지 자세하게 들어보도록 하겠습니다.
When we looked at the market 2 weeks ago, we could identify that the continuation of the weakness in the internals was still going on. And what I'd like to do today is provide an update to that. When we think about the market this year so far, it's acknowledged that this is the worst January we've ever had. Sometimes it's very difficult to predict the bottoms of the stock market. We know that the stock market returns about 9% a year on average. Well, very rarely does it ever return 9% or 8% or 10%. It either returns 20% or 30% or it loses 10% or 20%, sometimes even worse. But in the course of the whole period, it returns on average 9%. So the way that you basically earn that 9% is you have to be able to withstand some of this volatility that we're having. We're in a period right now of pretty significant volatility. And one of the reasons that the volatility is so significant, on top of the fact that we don't necessarily know where we are with COVID, but we also have a Fed that some people are anticipating 7 interest rate hikes in the course of 2022. I don't believe we're going to have 7 interest rate hikes in the course of 2022. So many times the Fed has been more hawkish or more concerned about inflation at the beginning of an interest rate hike cycle, and it never goes to the extent it does because the market and the economy slow down, the stock market sells off, and they don't want to be the cause of a liquidity event. So let's take a look at where we are now versus where we've been 2 weeks ago. We're going to look at the advanced decline line. We're going to look at the number of new highs, new lows in the NASDAQ as a proxy for the health of the market. So right here, we can see that, and this chart right here is the last 20 years, okay, of the advanced decline line. And we can see that in 2008, when we were breaking down fairly significantly, our advanced decline line now is much, much lower. Well, why is that? Well, what we have right now is a very, very low funds rate, a very, very low 10-year note yield, and the technology stocks, they are the biggest earners over time, and they're also the most volatile, and they're the component, the growth component, if we think about value stocks and growth stocks. Over the last 20 years, growth stocks have significantly outperformed value stocks. And over the next 10 years, I'm sure that growth stocks are going to significantly outperform value stocks. But what happens with growth stocks is you're anticipating this big growth in earnings farther and farther out than you are with value stocks, where you have a much more consistent earnings yield and a return. So when you change interest rates, you have a much bigger effect on the growth stocks earnings than you do on the value stock earnings. And that's why this decline right here is so much more significant than we've had before, because we're doing this from a relatively low interest rate cycle right now. So we're worried about how high up they could go. I still believe that we are at the peak level of concern about inflation today. And in 6 to 9 months, that concern, let's go 9 months. In 9 months, that concern is going to be much less than where we are right now. In fact, I don't believe we're going to have much inflation at all in 9 months, because we're going to alleviate the supply chain concerns. And we've already looked last week at Purchasing Managers Index and how it's a proxy for inflation going out 6 months. So let's go to the next chart that we have. This is what we saw 2 weeks ago, okay? And what we saw right here is we saw a decline in the new highs and new lows in the end of 2018. And then we had the COVID, and now we were down here. So we can see that we were not at that peak level of COVID, but we were back to the level that we were at the end of 2018. Now, if we flip forward to the next chart, we can now see this is just blown up. This was the end of this was the beginning of COVID right here, and right here we're down to that same level in the new highs, new lows that we were in March of 2020. So much lower than where we were 2 weeks ago. So now what we have is a condition where we've seen the equivalent amount of selling that we had in 2020, in March of 2020. Okay, let's flip to the next chart. When I take that new highs, new lows, and I look at where we've been over the course of the last 20 years, now we can see not only are we deeper than where we were in March of 2020, but we've taken out the 2008-09 lows, and we've gone significantly below where we've been there. So we've absorbed a tremendous amount of selling in the market to date. Okay, let's go to the next chart. Now, if we take a look at, so if we think about the selling that we've had, okay, how can we see how that's been reflected in sentiment? So if we look at a couple of things, if we look at the option put call ratio, where the number of put buyers is bigger than the number of call buyers, we can say that that's a sign that people are worried about the market, they're trying to hedge up. If the number of call buyers is greater than the number of put buyers, we can think that people really want to continue to be able to try and capture upside on this. So we'll take a look at that, and then we'll also take a look at investor sentiment. And investor sentiment, we can say, when we do this survey, there's a survey that's done every week in the United States. How bearish are you? How bullish are you? So if we just take the percentage of the survey, the respondents, and say, how bearish are you? Let's look at what we see. These conditions right here, okay, these red vertical lines are when the put-call ratio exceeds a certain level, more put buying than call buying, and at the same time, we almost are at 50% of the survey respondents are bearish. And that's, you can see that if we go back the last 5 years, this is about how deep we get. This was in March of 2020 at the beginning of COVID. This was at the end of 2018 when we were, just like right now, concerned that we were going to see a significant number of interest rate increases, which never really happened. And now we're back up to this level again. And in all these conditions, this one, the decline was very, very shallow. In all these conditions, the market had turned up.
네, 버니와 함께하는 미국 주식 시간, 오늘은 미국 현지에서는 지금 어떤 상황이 일어나는지 이야기도 들어보고 차트적인 분석도 함께 해보는 시간이었습니다. 네, 많은 도움 되셨길 바라겠고요. 문자 샵 0082번으로 버니의 미국 주식이라고 문자 보내주시면 이런 이야기들 장중에도 나눠보실 수가 있다는 점 참고해 보시기 바라겠습니다.